Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Monday, everybody. I hope you had a restful weekend, and I wish you all a productive week ahead. I have a bit of a scratch in my throat today, so my voice might sound a little bit more hoarse than usual. I hope this is not too distracting. First up, 2 quick economic updates. If you enjoy the video, don't forget to like and subscribe. According to new official data published today, Monday, from the National Bureau of Statistics, China's consumer prices rose less than expected in August, as concerns grow over deflationary forces. China's consumer price index rose 0.6% year-on-year, slightly below analysts' expectations of 0.7% in a UK-based Reuters poll and a medium forecast of 0.7% in a Bloomberg survey of economists, but faster than July's 0.5% increase. Industrial prices fell 1.8% year-on-year, compared with a decline of 0.8% in July, and analysts' expectations of a 1.4% fall. The modest rise in consumer prices was fueled in part by larger costs of food because of bad weather. That is according to the National Bureau of Statistics. Weak demand is denting China's chances of hitting its growth goal of about 5% as consumers delay purchases and businesses slash wages. And policymakers are increasingly concerned about the deflationary trap. On Saturday, we covered what now appears to be censored comments on the Chinese internet from former central bank governor Qin Gang on Friday, who called on policymakers to focus on fighting deflationary pressures, quote, right now, end quote. That marked a rare acknowledgement by a prominent former official of Beijing's battle with falling prices, which has been labelled politically sensitive in recent months. He told the Bund conference in Shanghai, quote, I think right now they should focus on fighting deflationary pressure. Overall, we have the problem of weak domestic demand, especially on the consumption and investment side. So that needs proactive fiscal policy and accommodative monetary policy, end quote. China's GDP deflator, which measures the impact of inflation on the real value of an economy's total output, has been negative for the past few quarters, he said. A negative GDP deflator indicates deflationary forces in the economy. Next up, Chinese financial media outlet Caixin reports today that most Chinese mainland-listed companies saw their net profits decline year-on-year in the first half of 2024, especially those in the real estate sector. According to data released by the China Association for Public Companies, more than 5,300 companies traded on the mainland posted total revenue of around 34.9 trillion yuan, $4.9 trillion US dollars, for the period, down 1.4% year-on-year. Their net profits attributable to parent companies fell 2.4% year-on-year to around 2.9 trillion yuan, according to Caixin's calculations. About 51% of the listed companies saw their net profits decline. Caixin writes that profit pressure facing mainland-listed companies is twofold, citing a stock market strategist as expressing, quote, on one hand, the market is weighed down by sectors such as real estate and semiconductors, affecting businesses in the upstream and downstream supply chains. On the other, the recovery of domestic demand is still poorer than market expectations, taking a toll on the revenue of public companies while market confidence remains low. End quote. The outlet's analysis of available company disclosures found that among the 10 companies that experienced the greatest net losses in the first half, 4 were property developers and 3 were in the semiconductor industry. Next up, we have some news on former Minister of Foreign Affairs Qin Gang. Since the summer of 2023, when he mysteriously disappeared from public view, his fate has been the subject of intense speculation. US-based The Washington Post reports over the weekend that Qin Gang is now working at the World Affairs Press, a publishing house with a public bookshop in a back alley in Beijing under the Ministry of Foreign Affairs. We had actually covered this as a rumor several months ago, pointing out that state documents still called Qin Gang a comrade, suggesting a demotion rather than something much worse. The Washington Post, citing unnamed US officials, argues that this rumor is indeed true. The demotion, which the former officials said took place sometime in the spring, is a, quote, fall from grace, end quote, but also means, quote, he's off the hook, end quote, with one official telling the outlet, quote, he's not going to jail, but his career is over, end quote. It probably serves not just as a punishment but also as a cautionary tale, the official told the outlet. The Chinese Foreign Ministry has repeatedly declined to comment on its former boss's fate. Qin had been fast-tracked for the Foreign Ministry role, handpicked by Xi Jinping himself. At 56, he was not only tapped as minister, but also elevated to state councillor, a senior position that Wang Yi, his predecessor, did not achieve until his 60s, after 5 years as foreign minister. This made his fall from grace that much more shocking at the time. Qin was an early adopter of the aggressive style of diplomacy known as wolf warrior diplomacy. During his first major news conference in March of 2023, Qin, who has also served as ambassador to the US, warned days earlier of containment by Washington, with remarks about a coming confrontation with the United States. It is still unclear why exactly Qin suffered his fall from grace. Regular viewers will remember that one popular theory is that he had an extramarital affair with a well-known Chinese television journalist, and the couple had a child out of wedlock, born in the United States. Personal indiscretions among top leadership is not exactly rare in China, though, but the public nature of the journalist and her connection to the US may have crossed the line. There were even rumors that information was being handed to US intelligence. If these reports are accurate, and Qin Gang has just been demoted, it would suggest that the most salacious rumors of what Qin did to lose his role as foreign minister are likely false. Of course, we may never know. Next up, one more development to cover. But first we move to today's sponsored feature. Sponsored features are limited to just a few a month to ensure that the channel is financially sustainable without being too disruptive to the viewer experience. If you'd like to know how I work with sponsors, this is in the description below. One of the most interesting and controversial developments in finance in recent years has been the rise of digital assets. Many traditional investors are increasingly interested in having some exposure to digital assets in the higher risk, higher return part of their portfolio. However, they want to do so through holding traditional stock assets rather than dealing with digital assets themselves. There is also demand for a diversified holding of these assets. Today's video sponsor, DeFi Technologies, provides an attractive way for investors to do just that. DeFi Technologies is a financial technology company that allows traditional investors to gain exposure to a diversified portfolio of digital assets across the decentralized finance and Web3 sector. The jewel in the crown is the wholly owned subsidiary, Valor, which creates ETFs and issues them. We have discussed DeFi Technologies before in the past. DeFi first sponsored China Update back in early June. Since then, its value is up over 30%. So congratulations to those who jumped on the stock back then. DeFi Alpha, DeFi Technologies' specialized arbitrage trading desk, generated an additional 19.3 million Canadian dollars, $14.1 million US dollars in Q3 of 2024 through low-risk arbitrage trades, contributing to a total of 131.1 million Canadian, $97.5 million US dollars in cash and digital asset equivalents in 2024. This is significant return generation. They are now trading at a PE ratio of 2 or 3. Incredible value. Eric Jackson, president and portfolio manager of EMG Capital Limited, in a June piece called The Next Kavana, Why I'm Long DeFi Technologies, expressed, quote, "If you use 250 million shares and management's implied but not official 2024 earnings number of 132 million with a 39x forward multiple and include the 70 million in net cash, you get a current implied share price today at $20 87 share instead of $1.60, suggesting the stock is currently valued at 1/13 its fair market value." End quote. The company is profitable, growing, and very undervalued, with brand recognition and a competitive advantage that is durable, and the market is starting to catch on. It's no wonder that DeFi Technology stock value is up over 2,800% year on year, outperforming Bitcoin by 10 times. Year to date, it's up over 250%. So we can see some risk with this pick, but potentially high returns too. DeFi Technologies is a very exciting opportunity for traditional investors to get exposure to this explosive emerging asset class, and as such is worth consideration for inclusion in any well-diversified portfolio. We remember that all investment involves risk. This sponsored feature is not individual investment advice. Always speak to an investment professional and do your own due diligence before making any investment decision. A big thank you to DeFi Technologies for once again sponsoring this episode of China Update. We now return to regular China update coverage. Next up, we move through updates in US-China relations. Over the weekend, the US Departments of State, Agriculture, Commerce, Homeland Security and Treasury jointly released an updated Hong Kong business advisory, warning US businesses about risks to their operations and activities in Hong Kong. According to the document, US companies, academic institutions, researchers and members of the media should be wary of, quote, new and heightened risks associated with actions undertaken by Hong Kong following the adoption of its Safeguarding National Security Ordinance in March, end quote. The updated advisory, first issued by the US in 2021, noted that the ordinance, essentially Hong Kong's local version of the national security law Beijing imposed on the city in 2020, could affect businesses and individuals operating in the city. The ordinance also provides an extraterritorial application of the law, which could, quote, affect or impair routine business activities in or travel to Hong Kong, end quote. The State Department has also maintained its travel advisory for Hong Kong, recommending, quote, increased caution due to arbitrary enforcement of local laws, end quote. The advisory states that, quote, businesses should be aware that the risks they face in the PRC are now increasingly present in Hong Kong. The national security law, the national security ordinance, and the actions by the PRC and Hong Kong authorities, such as the imposition of bounties, may negatively affect businesses, staff, finances, legal compliance, reputation, and operations, end quote. Hong Kong's government hit back the same day, rejecting, quote, the misleading and untruthful remarks on Hong Kong's legal system and business environment in the so-called updated business advisory issued by various departments of the government of the United States, which tried to create panic, end quote. Next up, in recent days, US and Chinese officials have also held high-level meetings. John Podesta, the US senior advisor to the President for International Climate Policy, had a Friday meeting with Chinese Foreign Minister and top diplomat Wang Yi. Podesta said the two sides were able to somewhat narrow their divide on climate finance issues during the Beijing talks. He added that there are still key differences in the countries' approaches to fighting climate change, but the discussions were able to help the two sides find a little more common ground on issues, including how wealthy countries should help provide funds to accelerate the green transition in developing nations and protect them from more extreme weather. Quote, notwithstanding some friction in our bilateral relationship, we can find places to collaborate for the good of our people and the good of our climate, end quote. Chinese and US commerce officials also met on Saturday in the northern port city of Tianjin for, quote, professional, rational and pragmatic talks about policy issues of mutual concern and specific issues raised by the business communities of the two countries, end quote, according to the Chinese Ministry of Commerce. The official announcements from both sides were fairly boilerplate with no new noteworthy statements. Next up, and finally, a quick update in the US-led West's technology competition with China. On Friday, the Dutch government said it would expand export licensing requirements for ASML's 1970i and 1980i DUV, deep ultraviolet immersion lithography tools, aligning its rules with export restrictions on those machines unilaterally imposed by the United States last year. US lobbying has effectively stopped ASML, the world's biggest vendor of chip-making equipment, from exporting its most advanced lithography systems to China. On Sunday, China said it was dissatisfied with the Dutch government's decision to expand these controls. As we know, Beijing has repeatedly criticized Washington's strategy of pressuring allies like the Netherlands and Japan to join export controls, targeting Chinese access to cutting-edge chips and chip-making equipment. As we covered over the weekend, even national champion Huawei is beginning to feel the pain from these restrictions. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Monday, have a productive week, and I will see you all tomorrow.